Dear clients, I'm Richard, Senior Dealer from Phillip CFD. US equity benchmarks continue to fluctuate within tight weekly trading ranges, with three of them, Dow Jones Industrial Average, S&P 500 and Russell 2000, moderately higher, while Nasdaq Composite ended last week with a modest loss. Investors seem to be weighing generally good US economic data flow against the upcoming June FOMC and the ongoing posturing between Greece and its creditors. Indeed, on domestic news, recent string of above expectation US economic data points to stronger US consumer spending in the second half of the year. For instance, May's non-farm payroll and unemployment claim numbers released during the first week of June were better than expected. Investors' optimism was further buoyed by a stronger rise in retail sales, as well as University of Michigan's preliminary reading of consumer sentiment last week. However, on the global front, Greece debt negotiation headlines take center stage, with investor anxiety growing on concern that no real progress has been sealed as of last Friday. In this regard, investors may wish to take caution that a crucial timeline looms on 30th of June as 1. The 4-month Eurozone build-up agreement extension ends, as well as 2. A large bundled payment of several smaller payments to the IMF is also due. On cross-market action, high-quality government bonds such as US Treasuries and German bonds were volatile. Treasury yields increased sharply at the beginning of last week, and on last Wednesday, the yield on the 10-year German bonds climbed to more than 1% for the first time since September 2014. Yields on both Treasuries and German sovereign debt then decreased abruptly near the end of the week, despite strong economic data releases as mentioned earlier. Such contradictory price action may be indicative of safe haven flows ahead of key risk events including June FOMC and Greece payment deadline. In summary, it appears that investors are still optimistic that there will be no rate hike announcement in this June FOMC meeting held on 16 and 17 of June, and are also expecting Greece to work out a temporary agreement with the IMF and other creditors, perhaps in the final hour, to kick the can further down the road. Notwithstanding this, near-term investor sentiment in this final month of Q2 is expected to come under pressure as market's uncertainty surrounds investor search for clarity on the timing of US rate hikes, as well as that Brexit jitters may continue to mount. Clients may consider using Phillip CFD to trade equities and indexes across markets to capitalize on rising and falling markets. In addition, you may also trade with many more benchmarks based on different strategies, which are available with Phillip ETFs. This is all for today, and hope to see you soon in our next round of market commentary. Thanks for watching.